Ready to go.
Oh, there we go. Okay, I think we're finally opened up and ready to go. So welcome everybody. Well, thanks for joining us tonight. I know we're just getting into this now, but now that you guys are get a little bit to settle in here, can you all do me a favor and let's use the chat? I want to know if you guys can see us, hear us, see the screen, all that good stuff. Make sure we're working here before we get going. Perfect.
Perfect. We got some good responses already, Andy. I think we got a really nice engaged group tonight.
Oh, we're gonna have lots tonight, I think. I think we're gonna be really good. So, just some, I guess, preliminary stuff before we get really into this. I'll give it a minute to let more people file in here. But just for everybody that's in here now, this is recorded. So if you have to step out, you missed something, you want a recap of something, this is recorded. By tomorrow. I should have an email out to you guys with the recording of it and all the other stuff that goes along with it. That way you can catch up and things like that. So the major thing to remember is, although you guys can't really talk on here, the chat box is going to be your best friend. There's always going to be either myself or Ryan is going to be monitoring that all the way through. So if you have any questions on anything, just answer away here. We'll try to get it to you as we see it come up, but I know it gets a little busy and hectic with this, so we do hang around afterwards and do a Q&A session for everybody too when we go over anything that we missed or want to talk about. So yeah, use that as much as you can. Don't be shy. We've encountered tons of this kind of stuff. So yeah, feel free. What else do I have here before we get rolling? Yeah, just I'm gonna put this in here too. You guys are gonna see this link come up quite often, but um, this is a booking link. So if at any time during this you want to talk more to us, kind of on a one-on-one, you want to see if the pre-approval works for you, you want to go over anything else, book that call with us. That way it sets up into our calendar so that we can be ready and available for you when it's good for you and a good time. So I'm gonna keep putting that in there, but save that as much as you can. We're going to try to keep this as generalized as possible, but just keep in mind though, when it comes to buying your first house during the initial start and all the way through, none of it's ever the same. Everybody's different. Everybody has a different set of situations. So if you think that, this might not work for me, let us know and we'll be able to at least answer or show you how we can actually make it work for you. And if it's not now, we're going to put you up on a game plan that's going to set you up for later as quick as possible. So yeah, we got a good group so far. There's over 20 of us in here now, so I think now we have a lot of stuff to cover. It's going to be a lot of information at you guys. So like I said, don't worry, it's recorded. There's going to be a lot coming at you. So we are going to cover heavily on the financing part. That is a major step. Um, but yeah, just bear with us here, and I hope you guys get a lot of good info out on here. So I'm gonna get this rolling here right away. If you guys gotta leave, by all means, go ahead, come back. We'll all be ready for you. So when you guys first signed up to this, and again, I want to say thank you guys for joining us on this Wednesday evening, even though it's spring is here tomorrow. It's nice out. I do appreciate you guys taking the time out of your day. So when you guys first signed up for this, you did get a message saying you are going to get a free copy of the my buyer's book and a buyer's guide. So yes, you are going to get a copy of my complete guide to buying a home book. I've worked on this the last few years. You're going to get it in an e-version so you can read it on your phone, tablet, whatever you got. Plus, we're going to give you a buyer's guide that kind of outlines a lot of this stuff we talk about too. So that's going to come at you guys in an email tomorrow with the recording of this as well. So again, thank you guys for everything. So now let's keep this chat rolling and make sure everything's working nicely. As a first-time home buyer, I know a lot of you obviously haven't done this before, whether you're new to Canada, you're living at home, you're renting. I know there's a lot of stuff in the media. There's a lot of stuff on social media. There's word of mouth. It is kind of I want to say a chaotic, hectic time, but it's definitely not that as bad as it seems. But let me know in the chat. I want to see what you guys are feeling. Are you guys feeling any of this? just at the getting started phase because we've all bought our first house before. I remember buying my first house. Ryan bought his first house. So if you guys are feeling any of this, whether you're feeling concerned or stressed about everything, uncertain, yeah, that's a big one, right? Can we actually get into the market? Absolutely, we can, right? It takes a little bit of finesse. There's a lot of things to go over with it, but it was definitely doable, right? So there's a lot of things out there to help you guys. You're in good hands. Our goal by the end of this webinar is to kind of alleviate all these things. And if not, book that call with us. Let's see how else we can help you with. But yeah, intimidated is a good one. So, you know, I I I really strive to make sure it's not an intimidating thing. Once you get into it, you kind of realize, okay, it's not as bad as it seems. It's smooth, and we help to make the process smooth, right? So, but yeah, so we're gonna get into this. Before we get started, though, I want to do a little quick introductions, just so you know who we are and how we're qualified to be explaining this all to you guys. So first and foremost, I am Andy Goddard. I am a realtor with Realty One Group Dynamic. My office is out in Stonebridge now. I am the team lead with ANC Realty. So I am the A in ANC Realty. We have built a real estate team with Realty One just to help all of our clients even more. So I've helped many satisfied buyers and sellers over the last few years. I've done this since 2021. And I service Saskatoon and the surrounding areas. So, like Ryan, I am licensed all over Saskatchewan, but I tend to stick close to Saskatoon just because I do live in Warman myself. I moved out in Warman in 2016. That's where I got married. I married my wife. We've had a son, our daughter, and our third one on the way. So it's just a great place to call home, and love to help everybody else call this place home. Being born and raised in Saskatchewan is a big thing for me. So I'm really happy. And the good thing for you guys is it's still one of the cheaper places to buy a property. So that's also a nice thing. I'm going to put this in really quick. This is a link to everything of my social media. So Facebook, Instagram, TikToks, YouTube. If you want to keep up to date on current stuff in the market, that's the place to find me at. And just to kind of see who I am. But when it comes to real estate, most of us do not have the funds to buy a home with cash. Very rare does that happen. So with a realtor, there's one thing, but you got to have a team on your side. And without financing, it's very hard to buy a home. So that's why I've partnered up with an amazing mortgage broker. We've been doing this for years together now. He is also part of ANC Realty, even though Ryan's not on the banner. He is in behind the scenes doing some amazing work. So I'm going to pass this off to him and he can introduce himself.
Good evening, everybody, and thank you so much for joining us. And what an absolutely wonderful introduction. Thanks, Andy. I noticed a couple of really descriptive words on there when we asked what that feeling was going to be: uncertain, concerned, intimidated. Trust me, Andy and I went through this as well when we bought our own first homes. And this is why we really wanted to put this together for you to let you know that choosing us to represent you and be your team and your guide and your it will be all with you all the way through the process. That's the biggest first step. We take all of that concern, all of that intimidation, and we make this the fun experience that it's supposed to be. We want to see that smile in your face when you move into that beautiful new home and you get that mortgage approved. That's what we're here for. So absolutely rest assured that we are there to walk beside you all the way through this process and really take the concern out of it and put the fun back into it. So my name is Ryan. I've been working in the mortgage industry here in Saskatchewan for almost 25 years now. It's over 20, but it's almost 25 now. I've seen a lot of changes to the industry. I've seen a lot of things come and go. The one big thing is that there are constant fluctuations in the market. We're going to see housing when it's a buyer's market, a seller's market. We're going to see, mortgage changes come and go. So really getting a good, strong financial base with myself and a really strong realtor base with Andy, with this team, you've got all the best assets at your disposal. I am married. I've been married for almost 30 years. I have two wonderful boys. Hopefully, they're going to be moving out of my house pretty soon, but they are still here and going through school. I do live right in Saskatoon in the Stonebridge area. I love the area. We were born and raised here in Saskatoon. I am fully licensed all over Saskatchewan. So don't think that because Andy and I are based in Martinsville and Saskatoon that we can only help you in those areas. We're actually licensed all over the province, and a lot of our stuff can be done remotely as well through, emails and phone calls and things like that. So we can help people all over buy property and get mortgages all over. So absolutely no worries there. A couple of things I do want to really touch on really quick. Number one, please use that chat function. We're going to have a lot of questions from people coming through that chat function. We're going to go through a lot of information. What I typically find is that if you've got that, you're wondering a question, there's usually 4 or 5 other people that are wondering that same question. So please be brave. Type that question in the chat box. Andy and I are going to be monitoring that all night for you and get those questions answered really, really quickly. The other would be that booking link that Andy's put in there. Really, really important. As Andy mentioned, every situation is so unique and so diverse, and really every solution for every one of you might be slightly different. So the information today is going to be fairly high level and fairly general, but know that each situation's got some slightly different things to it. So we want to talk to you one-on-one. We want to have that one-on-one conversation, find out about you, about your family, about your hopes and dreams, and really tailor solutions and properties that are going to best fit you and your family. So click that booking link. Let's meet you one-on-one, and let's start the process going forward. I'm going to pass it back to Andy to get the process started tonight, and we'll chat soon.
Awesome. All right, we're gonna get into this. Appreciate it. That is the team. Like I said, you need financing. You need somebody to help you find a place. It just works so well together when you have people that know and work and trust each other. So yeah, let's get into this really quick. I'm gonna go over this slide. I could literally spend hours on. This is the whole steps to buying a home from start to finish. So I'm gonna condense that into like a minute, right? So work with me, but I just want to give you a general outline of what it looks like. Okay, so whenever somebody comes to me, whether they're new to Canada, whether they're living at home, they're renting a place and they're tired of the rental, right? They ask me, Andy, what do I do to get my first home? How do I buy a place? Well, I tell them, come to the webinar, learn some things, but your main thing nowadays, especially with this fast-paced competitive market, is get that pre-approval done. Okay, there's 2 really solid reasons why this is very important to be your first step. Number one, it tells us how much you can afford, right? That is huge because there's nothing worse than getting excited for a $500,000 or $600,000 new build out in Brighton or Aspen Ridge to find out that you're approved for, let's say, 450, right? To go from 100,000 or more down to something else is hard to do. So we want to keep expectations where they should be, shop in that budget we have for you, and then it just makes things a lot more smoother. The other reason why it's so very important is, like I said, it's very competitive market right now, lack of inventory, lots of buyers. So we want to have every tool we have to make the best offer possible, and having at least a pre-approval to show that we have some sort of financing ready to go is huge when it comes to writing those offers. Okay. So once we talk with Ryan, get him involved with everything, make sure he gets us that pre-approval like he always does. Then we come back to me. We sit down and we figure out what kind of house or property is going to be the best for you and your family. Are you looking for that standalone house? Do you want the east side? Do you want the far west side? Do you want Warman, Martinsville, surrounding areas? Do you want a townhouse or a condo because you like to travel, right? Are you building a family? We need to know what's going to be best for you going forward in the future as well. So we make that search kind of tailored to each person. Then once we have that ready to go, we actually start physically looking at properties because there's no better way to learn if you like it or not by being in them. Pictures can hide a lot of things, make it look bigger than it is. We need to see for sure if it's going to fit you. So we do that. We go on a bunch of house tours. And then once we find one you guys really like, then we sit down and we write an offer. Now, normal times I would have been able to negotiate some money off. We still can, depending on the property. But because of low inventory, it's getting a lot harder to negotiate things, right? It's more competitive. But if there's a chance I can negotiate anything with the property, that's my job. I will do that. So the good thing is if we do get an accepted offer where the sellers agree to your terms, we go into what's called the condition phase, and that is gives us time to get everything settled about the house. So the main condition is financing. So Ryan is going to need some time to finalize your pre-approval. Right now, he knows how much he needs to get from the lenders. Gives us a chance to do a home inspection, which is very important when buying a home, just to know everything about your house. If you're buying a condo, it gives us time to get the condo review. And I know I seen her on here. Another member of our, let's say, team is my lawyer is on here too tonight. Kemi's on here with me. Kemi is an amazing real estate lawyer. I use her as much as I can. If we're buying a condo, we're going to have her involved too. Plus, you need a lawyer to finalize the sale of your home. So that gives us time to go make sure the home that you're buying um, is sound and it's something that's a good investment for you. Once we have all the conditions satisfied, um, we remove those conditions. So the financing is good, the home inspection is good, the condo review is good, right? We remove those, we firm up the sale, and then we just wait for possession date. So while we're waiting for possession date, that's where you sign the rest of the documents with the lawyer. You make sure you transfer the title in your name and there's no any other issues after that. And then once possession day hits, I go get the keys. I meet you at your new place. We do a very thorough walkthrough, make sure all is good on your end. I pass you the keys and you are now a proud new homeowner. So again, so much that goes in between that. But the main thing to take away from this is there's people out there like myself, like Ryan, like Kemi, who can walk you through every single step from step one to the day you move in and beyond. There's people there to help you every step of the way to show you what you need to do. We don't just write an offer and send you on your way and hope you figure it out. We will explain every little detail when it comes to buying a place, so you're not alone out there. Okay, so again, everybody got any questions? Keep throwing them in the chat. We'll keep moving on to the important stuff here. This is where we're going to get a lot of information. You're going to get a lot of stuff thrown at you, so ask as much questions as you can when we go through this. So the mistake that a lot of first-time buyers make when it comes to buying your first home is not getting that pre-approval. This is very, very important, right? Like I mentioned, shows us that range of affordability, how much you can purchase, and gives us that extra tool to write a very solid offer. There are 3 things that are needed to make a mortgage approval. Now, again, this is where it's very important to remember. This is not black and white. This isn't for absolutely everybody. This is a general outline of what they typically look for. But every single individual here is different, and there's things that we need to work around, and there's things that we can work with. Okay, so if I say things in here like, I don't have that, or that's not going to work, reach out anyways. There's a very good chance we can work with you, or at least give you an idea of what needs to be done to make it work. So when borrowing money in Canada, credit is a big thing. Credit is always huge. I know anybody that's new to Canada, when they come in, they say you got to get a credit card, which is very important. Get that credit built up quickly, right? The minimum credit score you need is about 620 to 650 to start. Anything above that, great. Anything below that, then you are looking at higher interest rates, different mortgage lending, things like that. Something we don't really get into right now. But just remember, 620 to 650 to start. Up from there is great. They want to know, do you have a bunch of credit cards? Are they maxed out? Do you make the payments on time? Do you miss a bunch of payments? Do you have lines of credits, car payments, any different type of loan you have, right? Do you have credit collectors calling? Do you have bankruptcy or debt consolidation in your pocket, right? Like, do you have any of that? They need to know that. The next thing is, of course, is your income. They need to know how much you make, either you or you and your spouse combined, right? What do you guys make? How much can you afford comfortably, right? And, some key things about your income. For a lot of us, they want to see 2 years worth of tax returns just so they get that baseline. Now, I know there's a lot of people that are new to Canada in here. There is a new to Canada program that can get you into a home in as little as 6 months of being here. So don't worry about that part with the 2 years. But typically, they need to see a job letter from your employer. They want to see 2 main things. Number 1, how much do you make? What do you make per hour, or is it salary? And number 2, are you guaranteed hours? That guaranteed hours is very, very important. Okay. A lot of times different things come up, but we want to see you're guaranteed, let's say 40 hours a week at 25 or 20 an hour, right? They need to see that guarantee. We've had people that they work 40 hours a week every week all the time and never changes, but in their job letter it says it's only guaranteed 20 hours. Then it becomes a slight bit of an issue, but like I mentioned, not this won't happen for everybody, but I'm just saying Ryan works some incredible magic when it comes to this kind of stuff. So again, don't worry about that kind of stuff. We can work with a lot of things. So they want to see that guaranteed hours, guaranteed pay. So some things to look for when it comes to your job. You have to be there at least 3 months. We want to make sure that if you're on a contract position, is that contract going to get renewed? Has it been renewed? Is it a year, a few months? We got to see that. Jobs that are commissioned, so real estate, mortgage brokers, car salesmen, things that are paid directly commission and no salary or anything like that. That is very hard to do. You would have to have 2 years full of returns, tax returns to show that baseline salary. If you own your own business, again, 2 years. If you work for a job like Uber, Skip the Dishes, DoorDash, those kind of jobs where you kind of run your own business and you run your own hours, those we can't use either unless you have 2 full years of income statements with that. Okay. Very, very important. So if anybody's doing that, they're like, well, I want to buy a home in the next few months, then you may have to think of, okay, I need to find a job that actually pays hourly and there's guaranteed. Okay. Very, very important for those things. So they're going to look at those two. But then the third thing that makes this happen is a down payment. Okay. Down payment is also very important. You need a minimum of 5% of the purchase price. So you're buying something that's 300,000, you need 15,000, you're 400,000, 20,000, and so on, right? It's very important. So down payment also plays an effect into how much you can get approved for. So let's say based on your credit and your income, you can be approved for up to like 500,000, right? But if you only have 20,000 saved up, well, then it definitely limits you to about 400,000, right? So this all works together to make one final approval. The thing with down payments is there's about 3 to 4 ways to get a down payment here for buying a home. So number one is the main one, which is your own savings account. Very common, the one we use the most often. If anybody's new to Canada, again, if you have money across seas where you're from saved up and you want to bring it over here to use, bring it over here ASAP, like right away. It needs to be sitting in a Canadian bank account for 90 days untouched so they can track it and make sure it's all good. Okay, so if you have money somewhere else across seas, please do your best to get it over here quickly to get that number start to track. Because every time you move more money in, it resets the counter. Okay, it needs to be here for 3 months. Very, very important. So those three things. So that's the first one is the savings. Number two, if anybody has RRSP saved up, you can withdraw up to 35,000 per person to use as a down payment. It is important you reach out to your provider to make sure you can use it that way because we've had people say they have RRSPs, but they are locked in and unable to use them. So please, please reach out to your service or your RRSP provider to find out if you can use it, and they'll explain what you need to do in order to use it. There is stipulations that within the first 2 years, you have to start paying it back in certain amounts, and there's a certain amount per year you got to put back into it. So make sure you find that out with your provider. The third way of getting a down payment, this is a gift from a family member. So brother, sister, grandma, grandpa, mom, dad. If any of those ones will gift you the down payment, we can use that. Just need a gift letter stating there using it for a down payment. When you get into things like uncles, aunts, cousins, best friends, that doesn't work. It has to be immediate. Okay, so those are the 3 ways to use a down payment. There is a fourth way, but it's more inclusive. If anybody on here is part of the Métis Society of Saskatchewan, there is a first-time home buyer's grant. They'll give you up to 15,000 for a down payment, and they'll cover some closing costs for you. So if anybody here is part of the Métis Society, wants to learn more about that and who to contact, reach out to me. I've got all the info for you there. So those are typically the things to look for. So that again is the broad range of what they need. They need good credit, they need income, and you need that down payment. So if one of those things may not work for you, definitely reach out to us. Let us know. We'll see what we can work with. If we can't do anything right away, Ryan is going to put you on a very, very solid plan to get there quickly. Okay. We're not just going to say, nope, sorry, come back to us later. It'll be, this is what you need to do, or this is the best way to do it. Okay. So those are the things. Keep throwing the questions in there. I know Ryan's on that. I'm going to move on. Keep this going while we're running on a good pace here. Pre-approvals are underwritten, so they get sent to the lenders. They underwrite them, so they review your income, your credit, and your down payment source, but they are reliable, and it tells us that maximum amount. That is what we need to know. How much can you buy? And again, we have this so we can write a good offer. I've had this come up a little bit is a cosigner. So some people can't get approved on their own. So they ask, what about if my mom or dad or brother, sister, or grandparent cosigns for me? And they can. An immediate family member can cosign for you as long as they can be approved for a mortgage too. They reside in Canada, whether that's permanent residency or an actual citizen, right? They can cosign for you. They are committed to being a cosigner for as long as you can't be approved for a mortgage, right? So that's how long they're committed for. But once you are able to get approved on your own, we can take them off. You can either hire a lawyer like Kemi, and she will remove the cost. And Kemi can really correct me if I'm wrong here, but the last time I checked, it's around, could be anywhere from $600 to $800 to remove them from the title. So a lot of people decide just to wait till they sell their property to get everybody off the title, saves it from there. But if you want to, there is a way to do that. So that is the extra cost. When you're buying a place, there's no extra cost doing it up front, but there is if you decide to take them off the title before selling your property. So if you have any questions about co-signers, again, book that call with us. I haven't put it in there in a while, so I'm going to book that call with us. Let us know how we can help you some more. Okay. This is where I'm gonna hand it over to Ryan. He's gonna let me have a breather, and I'm gonna hand it over to Ryan. He's gonna talk about some mortgage updates and that new to Canada program that's super helpful for anyone that's here. So Ryan, I will pass it off to you.
That sounds perfect. I'll just get you to flip that sign over. There we go. So yeah, as I mentioned, we do typically see rule changes coming. I mean, new governments bring in new rule changes. Sometimes it's a necessity in the market. Sometimes it's really trying to either cool down or speed up the market. But we see rule changes coming in all the time in the mortgage world. So one thing that did come in, typically with insured mortgages specifically, any down payment that is under 20% does have to be CMHC insured. And basically, that's an insurance to allow you to go into that 5 or 10%. The government has a CMHC program that really insures the lender to go with that smaller down payment, the larger loan, and cover you. Now, what happened with that is they used to have amortizations. Now, what an amortization is the total lifespan of your mortgage. A term would be the term that you set the rate, so 3 or 5 years, but the amortization would be the total life. Typically, it's 25 years. With an insured mortgage, they used to have that capped at 25 years maximum. Now, with the mortgage market really heating up and people are really feeling the tightening up of trying to qualify for a mortgage, the government realized this. So, what they've done, especially in the first time home buyer area. So, what they've done is they've said anybody that is a first time home buyer, or if you are buying a newly constructed home, so a brand new home that hasn't been lived in before. So, if you're a first time home buyer or you're buying a brand new construction home, that you can actually take an amortization up to 30 years with that CMHC insured mortgage. Now, what that does, expanding your amortization or your lifespan of your mortgage out to that 30 years, is it's going to spread the all your payments over that longer span, which typically means you're going to get a lower payment amount, which also means that you are going to qualify for slightly more mortgage than you would have at 25 years just because that payment's going to be lower. So it's really kind of a twofold win for our first time home buyers and anybody buying that new construction home, is that you can either get a lower payment if you're buying kind of within that amount that fits your income at 25 years, or you can buy a little bit more house. And that's really what we're finding most people are doing now, is it's allowing them to qualify in that little higher house bracket to get that special house that they do want. So that went into effect as of December 15th. So everybody now, if you're a first time home buyer or buying that new construction, we do have those 30-year mortgages across the board, both with the CMHC insured stuff, and they always had it for any down payment over 20%. That's already been in there. So some great updates there as well. Now, moving on, one of the things that we do have a ton of our clients coming into Canada, and Andy and I do a lot of these, so we're very well versed in a lot of these types of clients, is that new to Canada program, helping our new to Canada friends who have recently immigrated into Canada fairly recently. Now, one of the biggest segments of that first time homebuyer market here in Canada is that really that new to Canada segment, people that have come in, over the really in the last 5 years. Now, most people coming into Canada used to really graduate into the major centers, your Vancouvers and Torontos, but because the housing markets in those cities are absolutely bonkers. Trying to get into a house, the average house price in Vancouver is over $1 million now. So trying to get into that market with a normal income, almost impossible. So what we're finding is that lots of those those newcomers to Canada are starting to migrate further into the prairie provinces, specifically into Saskatchewan and into Saskatoon. Just to let you know, Saskatchewan and Saskatoon specifically is one of the most affordable housing markets in Canada. It's actually top two. Winnipeg is kind of the other one that we see a lot of, but Saskatoon is in the top two most affordable housing markets in the country. So really being here and looking in Saskatoon, and specifically in Saskatoon, huge win. You're going to get into something a lot easier than you would in other provinces. Even next door in Alberta, it's actually a lot higher purchase prices there than they are here. So the housing market here, very strong, very stable, and very affordable. What we typically see is about 1 million to 1.5 million new immigrants coming into Canada each year. And, the immigration laws are kind of changing and flowing, depending on which political party is in. But we are seeing still the open door policy. We're seeing a lot of people coming into Canada each year, and that really is something that we really help drive the Canadian economy, is that influx of people every year, because they come in, they are getting jobs, they're using resources, they are buying food, they're buying housing. It's really a huge driver of the Canadian economy, and we love that. We want to make sure that our economy continues to grow, and we keep those new to Canada friends coming in every year. So let's kind of step into what this means. Now, as you can see on there, and Andy talked about the three pillars of getting a mortgage, typically being that the credit side, the down payment side, and the income side. Really, the new to Canada program touches on all of those. The government realized that people coming into Canada typically aren't going to have a lot of Canadian credit, usually none. They're usually going to be fairly new at their jobs, and the down payments, they're going to either have to save for them, or they're going to bring them over from their country of origin. So the new to Canada program really tailors to find solutions to those types of clients. Now, the big one we'll start with is usually that the income and employment. That's usually the biggie. Um, what we typically find, as you can see, for the New to Canada program, this is usually for people that have immigrated in the last 60 months, 5 years. Okay. If you've been here longer than 5 years, you're probably very established. You probably have your credit going, all that sort of stuff. And really, once that happens, once you have that credit, you have that establishment, you would just go under a normal mortgage program. You don't need the New to Canada program. This is really for people that have come in the last 5 years. One of the biggest questions we get is, what do I have to have for paperwork coming into Canada to qualify underneath that program? I've got a permanent residency. Does that work? I've got a work permit. Does that work? I've got a student visa. Does that work? Now, the big thing is that they want to make sure that there is a really, really, really strong chance that you're staying in Canada permanently, right? So the two biggies that they really use underneath this program are, if you're a permanent resident. So if you're coming into Canada, you have your permanent residency already. Lots of people do before they even get here. Absolutely, boom, that qualifies you underneath the New to Canada program right away. The other is the valid work permit. So if you come to Canada, you don't really have your PR status yet, but you do have a qualified work permit. That also works underneath the New to Canada program. Most are surprised, that also works, but it absolutely does. The big thing on the work permit is there's a bit of a time constraint on it. So they want to make sure that yes, you're going to be here for a long time, right? And typically working towards that PR status. So what they want on the work permit side is that you do have at least 183 days left on that work permit to qualify. And most people do. They come here with years on that permit. So really just make sure work permits work as long as we have that time on there. Now, I did mention one other one, the student visa. Unfortunately, those are people that are typically coming into Canada to study. They're not guaranteed to stay, unfortunately. So most of them will come here to study, come here to go to school, and then they will go back to their country of origin. So that's kind of why the student visa doesn't work underneath the New to Canada program, but absolutely the other two do. Now, let's jump in and talk about the income here. So, as Andy mentioned, really what we are looking for is some structure and stability and consistency. That's what the lender loves to see with income. Now, really, the New to Canada rules and the normal borrower qualifier rules are fairly similar. Now, really, what we're going to see is if you come to Canada and you've got a salary job, so you've got a guaranteed full-time job with a salary of $60,000, boom, we can use that. If you come and you've got a full-time job with 35 or 37 and a half or 40 hours guaranteed every week at a certain wage, 25, 30, $35 an hour, we can use that. There's structure, there's stability, you're full-time permanent. There's a guaranteed amount of hours at a guaranteed wage. There's lots of structure there. Lenders love that. Really, all they ask is that you have had your job for a minimum of 3 months. So there is some consistency to the fact that you don't just kind of start and they're not sure if you're going to stay there. So once you have 3 months full-time employment, structured job, salaried or guaranteed hours, we can get you that mortgage right away. So that's kind of how the income side works. Now, the other side of that would be, as Andy mentioned, if there are any fluctuating incomes or self-employment or commission structures or Uber drivers or skip the dishes or anything like that, or people that are on casual contracts, people that are not guaranteed, or there is a contract that runs out in a year or 3 months or whatever that's going to be. They want some stability there. As you can see, with those incomes, they do go up and down, or they are very short-term pieces. What the lender wants to see there is typically a 2 year history of doing that job to show the stability that you're going to be there. We did get a couple of great questions, as we went through from Miles and Melanie on seasonal income as well. Really falls into that same category because it's you're going to work part of the year and then you're likely going to go on unemployment or something after that. There is some inconsistency with that income, so realistically, once you've been doing that for a couple of years to show the stability, then we can redo that seasonal income. So hopefully that answered your question as well. Now, the biggest thing I did want to talk about on the income side, and we get asked this a lot, um, especially with newcomers. One spouse comes over, the other one might stay over in their country of origin, and we get asked a lot. Okay, if we go on this mortgage together, borrower A is here, she's working a full-time job, everything is great. The husband is still working back over in the country of origin, and he's generating an income over there. Can we use his income to qualify the application and include him on the app as well? And unfortunately, the answer there is no. The reason is that for our lenders to really qualify the income properly, know the structure and stability of a company in another country, almost impossible, right? So they do have to kind of draw that line somewhere. The income does have to be for a Canadian company. You do have to be working for a Canadian salary, and you do have to generate income that is in Canada. Okay. Now, the one kind of caveat to that is if you're working for like a major worldwide conglomeration, a worldwide company, and you've been doing it for 2 years. As long as you have been working for a very strong worldwide reputable company and you filed your Canadian taxes with that income for 2 years, we can then use that foreign income, but only under those circumstances. So we really just wanted to specifically answer that question because we do get a lot of questions around that. All right, let's jump on to slide 2. So, of course, the next thing that we talk about is that credit, that next pillar. Now, for credit requirements, as mentioned, the New to Canada program does take into account the fact that most borrowers new to the country are not going to have a lot of credit established or very little credit established. Usually what happens when they do land in Canada, the immigration consultants that they're dealing with, they get them set up with a bank account, they get them set up with a credit card. It's awesome. It really starts the clock on the credit right away. So great kudos to them to get that done. But usually that's as new as it is, right? They might have a brand new checking account that their new pay goes into, and they've got one visa that's $1,000 that they don't really know, what or how to use yet, maybe, or don't use it a lot, and maybe it's just the one line. So what most lenders love to see is a 2-year history for 2 lines. Of course, you're not going to have that underneath the new to Canada program, and the program realizes that. So what they've really tried to establish is different ways that instead of using the credit bureau and maybe credit cards to establish a credit rating for you, they find other means to show that you are a good credit risk. So as you can see on there, what we have for those rules on point number 2, if you've been in Canada for under 12 months, it is a pretty short time frame. What they do ask is that you do have a little bit more down payment. So usually the minimum down payment in Canada is 5%. Now, if you've been in Canada under 12 months, so you are a little bit higher credit risk because you don't have a lot of established credit, they're going to ask for a little bit more down payment. So they do want a 10% down payment. But all they ask on the credit side is that you can show 6 months of a well-handled bank account. So usually your primary bank account that you get set up when you land in Canada, just show us 6 months worth of those statements showing that there's no missed payments and that your pay goes in pretty regularly and that you pay all your bills and all that stuff is running a good balance. That's all they need to show good credit with the additional down payment. So really, really, really easy. As you can see, 6 months worth of bank statements, 10% down, boom. Within under 12 months, typically you're going to get that credit piece established pretty quickly. Okay. Now, as you can see, we do need 6 months of the bank statements there. So what that typically means is that you are in Canada over the 6 month mark to have those 6 months worth of bank statements. So, under 12 months, but typically over 6, because we do need to have those 6 months worth of bank statements to show the credit side there. Okay. Now, if you have been here longer than 12 months, it's great. That typically means you're starting to get entrenched in, the Canadian economy. You're starting to establish that credit rating. Now, once you've been here for over 12 months, you don't need as much down payment to get in. So as you can see, that down payment goes down a little bit to 5% requirement instead of 10. But what we do there is we kind of look at a little bit a different solution for the credit side. So what they typically use there is that they figure that, coming in, if you're not already bought a home, you're likely renting one. So what they ask for there is 12 months worth of your rental history. So what they're going to get is a letter from your landlord showing that your payments have been good for 12 months. And we will get you to show your bank statements as well, showing that that rental payment goes out consistently, at the first of the month or whatever that is for the 12-month span. And boom, you've got that one credit piece already established with the rental side. And then they ask for one other thing, and that can be any structured payment that you have. So as you can see, 12 months of a timely repayment on any structured payment, a power bill, an energy bill, if you have cable at your rental, if you have a car plate, if you have a car payment, if you have a cell phone, anything that can show 12 months worth that you make your payments on time of any of those, plus your rental payment, boom, 5% down, you can get a mortgage once you've been here for 12 months. So as you can see, a lot of concessions are made, even if you don't have credit cards established for 2 years. There's some great options here for you to very quickly get into your home as a new to Canada borrower as quickly as 6 months. So really, it's a great program to get people that extra help, that extra step to get into stuff quickly. Now, moving on, as Andy mentioned, our last pillar is always going to be that down payment. So we've covered the income, we've covered the credit. Let's move on to the down payment piece. So as I mentioned, if you've been here that under that 12 months, between that 6 and 12-month window, we do need that slightly extra down payment bump up to 10%. But of course, the credit requirement on that is just the 6 months bank statements. Once you've been here that 12 months, of course, we can jump to that second tier. We'll get 12 months of your rental history, 12 months of, a utility bill or a cell phone bill, and that will also get your credit, and it will allow your down payment to come down right to that typical normal 5% that most normal Canadians are allowed to have as well. So you can see some great options for the down payment to get you in quickly there as well. Andy mentioned some great options to get into those down payment areas. Typically, people coming into Canada are not going to have a ton of RSPs. Sometimes you do, but lots of times they don't. The one biggie that most people come in is bringing funds from another country. As long as they've typically been in Canada for the 90-day requirement, great. Or if they have been transferred in inside that 90 days, we will likely go and get bank statements from your country of origin to show that you've had those funds in your savings, and we'll show the wire transfers over. Best case scenario, bring it over as soon as you get into Canada, bring it over, put it in a Canadian savings account, let it sit there till you're ready to go. As long as we can show a 90-day history of that money, you're good to go. Okay. The other big one that people use is that gifted down payment using family. Now, again, it does have to be, unfortunately, it does have to be an immediate family member. So we can't go out to the uncles and best friends and guy down the street and your boss and things like that to get the money. We find that really is just an inaccurate way of the way things go. It happens very rarely, but the government had to again shut that line somewhere. So they've said it does have to be an immediate family member that does gift you that money, and it does have to be a non-repayable gift, not a loan. Okay, so they're gifting you the money that you don't have to repay back. What we mean by immediate family, as Andy mentioned, so mother, father, grandparent, or child. The other caveat to that is if you are a legal guardian, that also fits in there, but you do have to be a member of the immediate family, not the extended family. Okay. And as I mentioned, the down payment typically does require a 90-day track record of the money in your account. So, best case scenario, bring it over, plunk it in that savings account, leave it sit there for the 90 days, and then we're good to go. Really be careful again with funds brought overseas, as some lenders do require that they have sat there for 90 days. Some are a little bit more lenient as long as we can backtrack it through the wire transfers and through accounts from your country of origin. But best case scenario, bring it here, let it sit there for the 90 days, makes it really, really simple. 3 months worth of bank statements showing the money there, check mark on that account. Okay. So as you can see, some great options. Most people coming into Canada are really worried. Well, I don't have any of those things. I don't have a stable job. I don't have um, my credit set up, and I don't have a down payment that I've saved or RSPs. Some great options. We've done so many clients. They've started their job. They've been in Canada for 6 months. They started their job 3 months ago. They've got a guaranteed salary. They got gifted money from mom and dad to get their 10%, and we used a different credit pattern. We used their 6 months bank statements, and they brought the money over right away, and put it in their account. We use credit, 6 months bank statements to establish the credit, and boom, within that 8 month mark, they are already in a brand new home. So lots of ways to get new to Canada help. And if you do have any questions, again, please feel free. We want to talk to you one on one, and each situation is definitely very unique. So we want to make sure that we kind of go through that with you and address any needs or concerns that we have, and set you up on a great plan to get you into that mortgage as quickly as we can. Well, I'm going to flip it back over to Andy to keep going. And if there are any questions on the New to Canada program, just post those in the chat. We'll get those answered for you.
Amazing. Lots of good questions in the chat here. Keep them coming, you guys. Appreciate all that. I know it's a lot of information. We are going to start wrapping this up pretty quickly here. But again, for those who don't have it yet, book that call with us. I know a few have already, which I appreciate it. I look forward to talking to everybody. We are going to move on. I'm going to go a little bit quicker through this stuff. One more thing when it comes to financing. So mistake number 3, that's using your bank. Now, I have had some people reach out to me after the fact of this and say, hey, I work for a bank and we're all not that bad. But you know what? I dealt with this a long time. Sure, there's some good ones. There's also been some issues. The reason I work with Ryan is because of the stuff that he does behind the scenes and for you, right? He's easy to get a hold of, he keeps you in the loop, and he does some magic work, and he's fast at what he does. It's amazing. So this is why it's not the best to use your bank. You know, the bank's great. Everybody uses their own bank, RBC, Scotiabank, CIBC, all that kind of stuff. But the reason why you should use a mortgage broker instead of a bank is I'm going to make it really clear for you. So Ryan has access to over 30 different lenders' products. Okay. So he can work with RBC, Scotiabank, CIBC, all those kind of guys. Plus, he accesses other lenders. So he's going to get you the best rate and the best program for you. Where the banks are restricted to their in-house product, right? RBC has their own things, CIBC has their own things, and so forth and so forth, right? So, yes, they can be a good resource of information, but when it comes to buying your property, use somebody that's going to work for you in the same hours we do, right? He works the same hours as me. I work a lot of the times, evenings and weekends, because it's after work hours, right? That's when real estate really happens. So we want somebody who's going to answer your phone, not when the bank closes, because that's when everybody else is off work. Somebody's going to answer you there, right? He's going to find you the best rate up front. That is huge. It's going to save you money in the long run, where the banks typically offer their bank posted rates, right? So you have to sometimes negotiate a better rate. Why do you have to when Ryan can do it for you, right? Ryan works for you and your best interest, not for the lenders. He's not employed by the lenders. It doesn't matter, right? He works for you to get you the best option. The bank, mortgage services, professionals, whatever you want to call them, they work for you. Yes, they're trying to help you buy a house, but they also have to work for their bank and make sure they're happy too, right? So a couple things there. And again, like I said, you can call or text Ryan anytime with any questions. Banks are hard to get a hold of. Takes them a while to get back to you, right? They're not as quick, right? And like I said, I've worked with some really good people over at banks. Don't get me wrong, they are some good ones, but it's just things to keep in mind when it comes to using your bank. 9 times out of 10, Ryan can beat the bank's mortgage rates anyways. The other thing I really want to touch on is it's not just any mortgage broker either, right? There is a reason Ryan and I have worked together for years. Okay, it's because he does his job so well. He works some incredible magic. Literally, just the last buy deal I've done with Ryan, he worked some, oh, it was magic. I can't get into details, but it was amazing. He turned from them not getting approval and losing on a new build to we're getting him a new build and we're going to take possession at the end of April. It was amazing what he did. Also, we had a buyer that was on this webinar with us last year. He was referred to a mortgage broker out in Ontario. Ontario people have no idea where Saskatoon is on a map or cares about it or knows about the market, right? So I looked and I offered on 3 different properties with him. It never worked out on either 3 of those because the mortgage broker out in Ontario kept crashing the deal. They have no idea how we do things out here. So after the 3rd one, I told our guy, I said, hey, let's talk to Ryan, please. Let's get him on the phone. Let's get him involved. So we talked to Ryan. Ryan got him pre-approved instantly. The first place we looked at and offered on, once Ryan got him approved, they moved into it. Okay. It's not just about a mortgage broker. You need one that knows what they're doing, does it very, very well, and nobody does it better than I've found than Ryan. And that's saying a lot too, because my dad is a general manager of a credit union back in my hometown. So for me to say that Ryan is my guy for financing, it's a big thing. And I love my dad. He's amazing, but that's why it's so important. So again, we're here to save you money. We're here to protect your investment, right? Banks can have higher payout penalties. And what are payout penalties? When you break your mortgage, which is a 25 or 30-year mortgage, most people are going to break it, especially when they buy their first home. So we want to make sure that whatever your reason is for breaking the mortgage or selling your house, you're not going to be penalized heavily, if at all. Okay, so Ryan's going to help you out with that. It's going to save you money when you go to sell your property. We want to save you money on interest rates too. So if we can get you a lower interest rate, it's going to save you money. And even if it's minimal, let's say it's, $50 a month he's going to save you, right? That's $600 a year. Okay. But in 10 years, that's $6,000. And I would rather you have $6,000 to go towards your next house or in your pocket than to interest rates, right? Owning a home is a long-term investment, not short-term. We want to make sure you save as much money as possible down the road. Okay. So a lot of good questions still. I'm going to shift over to the real estate side of things. I'm still going to try to get us out of here just after 8 and hang out for some questions. But if you guys have any more questions on financing, want to see about your pre-approval, what you need to do, book that call with us. I know there's a few already wanting to talk about it, so please book some more. And I'm going to get into the next few things here. So a mistake that people make when buying their first home, especially if we're going for a new build, which happens quite often, is you buy directly from a builder. Now, there's nothing wrong with going to the builders. I know many builders in the city, but it's very important that when you're buying your first home, you have somebody to take you along with you to explain things on an outside perspective, right? Going to a builder is a lot like going to the bank. They're going to sell you their product and their product alone. And I want to make sure that you know a bunch of different products that's going to fit you better. Who's a good builders? Who offers what? Who are good to deal with? Who have good properties coming up? What do they do in terms of inclusions and things like that, right? I know many builders, so I can take you on tours to a bunch of different builds because I've built those relationships with builders. Okay. A lot of them don't like to negotiate their purchase price because it does affect their other new builds. So they typically stand firm with it. But what I do for buyers is I try to get things included like appliances, air conditioners, decks, any add-ons. I try to throw that in there. If not, knock some down for them so you guys get it for cheaper. I know I did one. There was an Ehrenberg new build out in Brighton. It didn't come with appliances or an air conditioner, so I negotiated both of those in, which was about a 816, about a $16,000 add-on, and I got it down to less than 10 grand, so almost half the price for those two things. So you may not be saving money off the purchase price, but you're saving money on add-ons. Okay, so that's things that I can help with. I've had people ask, do I get a cheaper deal if I go to the builder? And no, they have a set price they have for them. I know the builders. I can sometimes get deals depending on the situation, right? So it just, if you want to go look at new builds all weekend, I'll go look at new builds all weekend with you, right? It's simple, it's easy. You want somebody that's fighting for you in case something happens during the condition periods or after, if something's going wrong with the property, you need someone that's going to help you out and got your back and not you against the builders. Okay. Very important with that. So that's a little bit on new builds. You want to talk more on new builds? I'm happy to chat all day long about them. They're a good option if that's something you're interested in. So another big one here. I know we're running a little bit of time, but I kind of want to see people's input on this one too, because this one is very important to me, and that's the home inspection, especially if you've never owned a property in Canada before or at all. This is very important. So can we throw in a chat here? I'm going to cut into some questions here. Does anybody know the average cost of a home inspection in Saskatoon, just for, let's say, a typical detached house? Throw me some numbers out. I want to see if we're close on that. NG, yeah, right. Yeah, there you go. 500 bucks. Yeah, so that is close. It's about 475 after taxes or with taxes, if you want to say it that way. It gets cheaper if you do condos because there's less to check. But I've had people tell me, you know what, 500 bucks seems pretty expensive for a home inspection. But when you're buying a $3, $4, $500,000 property, 500 bucks is nothing compared to the information you get on it. And of course, if they find something wrong with it, if they find something wrong, you can walk away. If you don't get one done and you find out that your roof is leaking, we're talking thousands of dollars, right? So I'll kind of show here. So my guy, and my guys usually typically do it from 450 to 475. They're amazing at what they do. I've had people use cheaper ones because they found them for cheaper. But you get what you pay for, honestly. I've done it with cheaper home inspectors, and it's just I'm worried that they miss things just from my experience. But anyways, that's up to you. Condos, I have sometimes they do them for just under, around the 300 mark, roughly, because there's not much to do. But anyways, that's kind of roughly the price. Very, very important to do to make sure you know that your property is sound. So a couple things you're going to see in the report. And I mean, they check everything. The only thing they cannot do is open up walls to look behind them, but they have tools to kind of look through them. Like on the left there, they have his infrared camera. It's also a thermal camera and a moisture detector camera, so they can tell if there's any insulation missing, any heat loss, things like that. If there's any leaks that have been shown before or active, so they can see that with things they can't typically see, but they go up in the attic. They make sure that there's no leaks from the roof or anything wrong up there. They check everything like your electrical, your plumbing, your heating, big important things, right? So we want to make sure you're going to be safe when you move in. right? You don't want any electrical issues. So they open up your panel. They check every plug in the house, every switch in the house. They check every piece of plumbing in the house to make sure there's no leaks coming from anywhere or in behind walls, right? It's crazy what they look at. I know we're getting into springtime now, but during those -30 days, you want to make sure your furnace is cooking the way it's supposed to be. So they open up your furnace, they test that. They test the air conditioner if they can, if it's nice out. They check every single appliance in the house to make sure the appliances are working. They check your roof. They go outside up on your roof. They check your foundation where they can. They check, yeah, they check your water, like literally everything in and around the house. They check. They'll check your garage. Like it's crazy. Like 50 some pages you'll get for an inspection of what they found and what they see and how they work. And, the nice thing, and the guys that I use for first time buyers is they explain how to maintain your house as well, right? This is what you need to do in the winter. This is what you need to do in the summer. And if you have issues, you call them. It's crazy what you get with this. The one disclaimer I want to make about appliances is they can only guarantee them for the day of inspections. Appliances are a lot like most of the stuff we buy is they just don't last like they used to. So as long as it's working that day when they tested it and when we move in, but they can't guarantee it's going to work like a day or two later. Okay. That's something they can't do. But that's just appliances. It's, I've had it before where somebody bought it, everything's fine. And then a day or two later, the dishwasher springs a leak. Not much we can do with that because it's just an appliance, right? So things like that, but they do test them all. But again, it's super important because it can save you thousands of dollars if you don't know there's mold damage, cracked foundations, leak in the roof, right? Infestation of like termites or things like that, right? It's super, super important to get one of these done. And like I said, if you're doing it during a condition period and something comes up major, there's a couple things we can do to help you out. Number one, we can say, hey, you guys need to fix this before we move in and show us proof that it's fixed by a professional. Number two, we can knock some off the purchase price so you can cover it when you move in. Or number three, if it's really bad and you simply don't want to deal with it at all or worry about it, we walk away and go find a different house. Now, if you walk away, the downside to it is you will have to pay for another inspection on the next one. But so far to date, knock on wood, I have yet to buy a place that they walked away from because of the home inspection, because we do a very thorough walkthrough firsthand, but things do come up, but usually I get them to fix it for them or knock some money off for you. Okay. So those are the things that we can do when it comes to a home inspection. So that's why that's very, very important. Yeah, and that's a good question. I was going to mention that right away too. Even if you get a new build, definitely get an inspection too, because they're putting these builds up so fast. People miss things get overlooked, things happen, right? I've had inspections on new builds and it comes back that they forgot to put this in or they missed connecting this. Maybe there's a piece of ductwork they forgot to connect over in a bathroom or something, or my guy caught like a scratched up floor when the appliances were brought in. Nicks in bathtubs, right? They check everything. So even if it's a brand new house, still people are human, people make mistakes, people need to get checked on it. So very important. So yeah, that's why a home inspection is very important. And the last thing I'm going to touch on and get us out of here at a good time is the condo review document. If we're buying a condo, whether it's a townhouse, an apartment condo, a house that's part of a condo corporation, every condo corporation has what's called an estoppel package. That is the condo document review package. Has everything about the condo in it. Like, again, hundreds of pages of stuff. So the important thing with this, and I know Kemi wasn't here, our lawyer wasn't here. She may have stepped out. She may not have come back. But Kemi is amazing for this. If you are buying a condo, what's not mandatory, but should be, is getting the condo documents reviewed by a lawyer. You're already paying them to do the transaction. Get them to review it. They can tell you how the condo is being run, what things to look out for, if there's any red flags, things like that. And I have walked away from condos because of a bad review. So it is very important. Now, the things that you're going to see in this thing is the main one is the reserve fund. How much does a condo have saved up in reserve in case of anything that needs to be fixed? Most of them have a healthy reserve fund is what we want to see. We need to know what needs to be fixed eventually, how much that's going to cost, how much is in the maintenance fund, how much is your condo fees, and how much of your condo fees are going to the reserve fund and the maintenance fund and things like that. What are the bylaws of your unit? What can or can't you do in your unit, and what can or can't you renovate in your unit? right? What parking space is yours and who does the landscaping, who does the snow removal and all that. It tells you literally everything about it, who has the insurance on it, right? It's crazy what you get with it. But it's important to get this reviewed because we want to avoid things like a unhealthy reserve fund, which can eventually lead to what's called a cash call. So if they don't have enough money in the reserve fund and something goes wrong and they need to fix something, but they don't have the money to cover it, they come to each unit owner and saying, you need to chip in a couple $100, couple $1,000 on top of your condo fees to fix this. So we don't want that to happen to you because again, we want to save you money, right? We want to make sure that the bylaws, if you are going to do renovations, that they're allowed, right? Some units don't allow you to replace the carpet with hardwood or laminate flooring. It has to stay carpet for that sound barrier for the units below you. So we don't want you to go in there and rip the flooring out, put new flooring in. Then you find out you get fined and you have to rip it out and redo it again. It costs you a lot more money to do it that way. So there's very, very important things to look at in there and get it reviewed by a lawyer. Make sure they've been audited correctly. Make sure the reserve funds are in place. The studies, I should say. Make sure that they are doing the general meetings and the annual meetings and what has included and all that. It's crazy, but you need somebody to look over that for you. Okay, so again, the same thing with this. Much like the home inspection, if you don't get it reviewed properly and you miss something, it could cost you thousands of dollars, whether it's cash calls, a bad unhealthy reserve fund, bylaws for your renovations and things like that. So, again, the broad overall of this all is we're here to save you and protect your money while investing in one of your biggest purchases you're going to make. So that's why we have these things. Again, I could go on and on and on and on forever, a bunch of this stuff, but we're already at 8 o'clock. It's Wednesday evening. I'm going to wrap it up on that note. But I hope that we at least alleviated some of this for now and to show you that there are people out there that's going to work for you to help you out, not just throw you out there and best of luck, you guys. Take care, enjoy, right? We're here to help you out every single step and whatever comes up along the way because there's always things that happens during the buying process and you need people on your side. Like Ryan put in there, book that call with us. I appreciate everybody who's booked a call so far. I look forward to talking to you guys. This is what it looks like. You open up the booking link, it brings up a calendar with times. You pick that time, I'll be ready to have a conversation with you guys that day. So, again, I appreciate you guys hanging out with us. But that kind of brings us to the after part, whatever you guys want to talk about. Ryan and I will hang out with you guys for a while. You ask some questions, you want some information on stuff we didn't cover or stuff we did cover, throw it out there. We'll hang out and yeah, and I'll let Ryan kind of jump back in here too now and we can see if there's any questions that we missed.
Yeah, there's been some absolutely fantastic questions in here. Thank you so much, guys, and keep them coming. One that I wanted to kind of throw back to you, Andy, and this is one that I did answer, but I think I would love your advice on this. Which is it more advisable to buy, an old house or a new one? We are eyeing an house on the east side, but it was built in the 1960s. We are worried on how it was built and if there are things like asbestos in there that may be harmful for health. And since it is on the east side, it may be like buying a brand new house. What can you advise on that?
Yeah.
And I think some insight on that would be fantastic. We do hear a lot of people that really kind of wonder that exact same question. So thank you for that.
Yeah, lots of times I get that question. It's like, what do you think about older houses? And now, like I've owned both. My first house I ever bought was built in 1972, and I bought that back in 2012, I believe is when I bought that. So it was in a 72 house, but it was solid. We loved that house. It was amazing. It didn't skip a beat. The furnace was still from the 70s, and that thing would cook you out. Now, there has been renos done to it. The thing with mine, because it was built in 72, is it had aluminum wiring in it. You're going to hear that with anything built in the early 70s. So usually from 70 to 75, there was a little stretch of 5 years there where they used aluminum wiring, which not really to worry about, but you just have to get an extra inspection with that just to make sure it's all good, like electrical inspection to make sure it's all good. But yeah, I get that. Like older houses are nothing to be afraid of. They are built very well. But the things we look for when it comes to buying an old house is what has been renovated and what needs to be renovated, right? Has the windows been updated recently? Are they the triple pane PVC windows? Are they still rocking the old aluminum sliding windows, right? Um, has the furnace been updated recently? Has the water heater been changed? Has the AC changed? Has the roof been done recently? If they've done major renovations, what has that been? Is it a complete tear down and redo, or is it just kind of, replace flooring and paint and things like that here? So when I look at an older house, depending on your price range too, don't get me wrong, but if you're looking at an older house, we want to see the major stuff has been already done, right? If there's one to do, not so bad. Like if you got to eventually do windows, okay, I know there's some good programs out there to help with the windows, right? But if nothing's been touched, then it's up to you, right? That's a lot of stuff you have to take care of on your own. But those are the things we look at. Compared to a new house, they kind of have both their pros and cons, right? My house was built in 2012 and we bought it when it was 4 years old. So yeah, it has a little bit more modern, I guess, features to it. But, there's some things in the older house I still miss. How solid it's built, bigger space. I own a two-story compared to when I owned a bi-level, right? Bigger, different spaces. So the biggest thing, and asbestos is a big one too, right? I hear that a lot. Asbestos is, again, not something to really concern them with, right? Asbestos was only bad because when they were putting it in, there was no safety regulations. They were cutting asbestos dust everywhere, breathing it in for years. If it's in your house and it's not being touched, it's like it's not even there, right? And as you get newer, like past like even 60s and up, there's very, very minimal, if not any more in it, right? It's very minimal. If you ever have any asbestos in there, then there's a certain way to get rid of it that's safe, right? You just wet it down, make sure it's wet and not creating dust. But even then, it's very minimal that you'd even run into it. Very minimal. Like if you get older houses like 40s and earlier, there will be more, and it's just more things we can talk about. Like if you do renovations, you should probably get somebody to come in and just test for it before you start ripping things out. But it's, 60s and up, things like that, very minimal to look for, right? So hopefully that answers it. But yeah, don't stray away from older houses. They're not that scary. They're very good. They're very well built. Things like that.
Yeah, it's funny you mentioned the old versus new. We've done the same. We had a house that was bought in the 70s that my wife still loves, raves about. We have since moved on to a new build, and she still talks about the old house. She loved the neighborhood. She loved the trees in that neighborhood. The yards were typically bigger back then. The other thing to worry about, and don't use the word old house versus new house. It's really pre-owned, right? There are lots of these have, like as Andy mentioned, have been wonderfully upgraded and updated as they've gone along. Most new houses don't come with a lot of the features that your previously owned home would. Things like driveways and basement developments and your front yard and your deck and your fence and your grass. All that sort of stuff typically isn't part of what a new home would be. Sometimes you get parts of that. You might get a driveway, things like that. And if you negotiate to put the basement renovation in, but lots of times they don't. So really lots of people want to be able to fully use their home and use the basement and use the yard. And buying a previously owned home really is turnkey. You get that as soon as you walk into that beautiful home. As long as it's been properly upkept and renovated along, it's got all the amenities that you're going to want. So if my wife had anything to say, we'd be going back and buying a previously owned home because she loved ours. Just kind of a little tidbit there on really it really depends on your specific needs and what you're really looking for. So book a call. Let's kind of go through it, and we can really kind of talk our way around that and find this solution that works best for you.
Yeah. And the other thing I tell people too, and I like that Ryan said is your wife loved it too. Mine absolutely loved that old house of ours. Again, older house of ours. She loved it and she was sad to see it go. But so yeah, don't shy away. And worst case is we'll go tour some old houses, older houses. I shouldn't say old, but older houses and show you that they're actually really well built and can look really nice, renovated and things like that. So just part of the process. Anything
Yeah,
else we missed?
I don't think so. We kind of went through. I mean, we've been answering kind of questions all the way along. We've got some great questions here on lots of stuff on income. This one had a lot of questions regarding income. Really, again, as we mentioned, income is really about consistency and stability. So if you got that salary job or that structured guaranteed hours at a guaranteed wage, those are pretty easy to do. If something does move up and down, or it's casual hours without anything guaranteed, or self-employed, things like that, they can be done. Absolutely. We just need a little more time with that stuff. Usually they want to see that 2-year track record of it running good, and we can use that income, based on that 2-year history. So lots of ways that we can do that income as well. Yeah, Elaine actually mentioned specifically on income regarding some structure on income. I'm just going to go back to where she had her stuff, full time. Yeah. So if you're full time, Elaine, and you've got, some guaranteed hours, likely if you're full time, you're probably working, 35 or 37 and a half or a 40-hour work week consistently every week. As long as your employer guarantees those hours for you every week at whatever your hourly wages, we can use that income. And we'll just take whatever you're guaranteed times by your wage times by 52 weeks a year, and away you go. We can use that amount of income for you. So another question here on from Miles: what is your opinion on small town living compared to the city? There's another great question. um Really, again, it really is very individual. We had relatives that grew up just outside the city in Delmany. Andy lives, just outside the city as well. And there's some absolutely gorgeous, gorgeous, we call them bedroom communities that are right close to Saskatoon, that are really within a 10-minute drive. Sometimes you'll see a little bit of price reduction in some of those smaller cities just because there is, it's just that one level different. But it's the houses are great, the neighborhoods are beautiful. I mean, there's some golf courses in all those, all those cities, and it's really what we see as there, it's really just an extension of the city. You're within 5 minutes, the drive is really quite simple. And you typically do find some absolutely beautiful homes there. Now, having said that, if you want to go the next level out and you're looking at maybe some small town that's not right around the city, kind of some questions there would be: do you have to travel into the city for work? Is that going to be a factor for you? Sometimes, again, those, if you're out 60 or 70, 100K out, you may get a slightly cheaper home, but you may not have the amenities in that center. You may have to still drive into the city for things like that. So there are costs there as well. So really, again, very, very individual.
Yeah, and funny with that
Another
small town thing. I get this all the time, and I'll bug Ryan about this lots. We'll kind of differ on opinions with that. But I live in Warman, and I travel into the city almost daily from that. And I get people when
Yeah,
I ask them, "Do you want to buy in Warman or in Martinsville?" and say, "No, the drive's too far." But any given day, and I know Ryan's going to fight on this, but I would rather drive from Warman to Saskatoon than in Stonebridge through the city during rush hour, and I'll die on that hill, buddy. But
very true. Very
yeah.
true.
But Stonebridge, very amazing community. Lots of people love being there. Helped lots of people buy in there. But they always say Warren and Martinsville is too far out, but it's less than a 20-minute drive from my house to the city. It's not that bad, and it's pretty chill. So again, it's all down to if you got enough vehicles and things like that. But yeah,
Yeah,
things we can look
absolutely. Elaine says, "I don't like rush hour." Me
at. Yeah.
neither. Me neither.
No, God, no, no.
But you're absolutely right. Calgary, Toronto, Vancouver. Oh, we're
Oh,
nothing compared to that.
no.
Elaine also mentioned, are you linked with First Nations buyers? Absolutely. So I mean, the thing about we Andy mentioned specifically the Métis. If you are a Métis card holder, there are typically resources that can help you out with that as well. First Nations buyers, if you are working right, you might work on a reserve. Typically, those are tax free. We have some programs that can help you with that as well. Sometimes, if you aren't paying income tax, if you're working on reserve, we don't have to worry about including that income tax and removing it off of your income. So we absolutely do that. We absolutely know how to navigate anybody that does work for First Nations or is a First Nations buyer. Rent to own. I did kind of cover this earlier. We got asked this a little bit earlier. Please be very, very careful with rent to owns. The rent to own providers sell this as a really great solution to get in. They can be very, 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 very tough to lend on. Lots of banks won't even touch them. The big thing on these is what you typically pay is the normal rent you would pay to live in the home. And then they take extra money from you that they put into what's typically called like a down payment account, and they stockpile that for you. Lots of times people get to the end of that 2 year mark or 3 year mark or whatever that window is, and they still don't qualify for the home. And lots of the contracts that are out there don't have provisions to return that money to you. So there's lots of things that are really tough to do with rent to owns. Be very careful with them. They can be almost impossible to lend on, number one. And number two, we want to make sure that you're protected. I would much rather see you rent a home, save your own down payment, and get into that when you're ready, because then at least I know you've got it. Yeah. So really watch the rent owns, guys. We don't love them.
Yeah,
What do we
I know
got
there's
here
somebody else
next?
that mentioned about it that I
Permanent
was.
part-time income with guaranteed 32 hours a week, and the second job that is a relief position. Great question for Mercy. So permanent part-time guaranteed hours, that works great. The second job, usually if it also has guaranteed hours as well, we can typically get those done on exception. You mentioned a relief position. I'm assuming that might be maybe casual or things like that. If it does have guaranteed hours, great. We can typically roll that in as long as there's guaranteed hours at a guaranteed wage. We can usually include those. If it is a casual, then we do need a 2 year history of you doing that job to be able to use it as well. So just a little clarification on both. Elaine mentioned she is a Métis status. I'm a Métis, but I am status. Okay, so you may actually qualify for that grant, Elaine. I would reach out to the Métis Society and see if you may qualify for that $15,000 down payment amount, and the $2,500 for closing costs. I would reach into that for sure. Yeah. How are we doing on these? Good. I think we got most of them. One quick question. What about commissioned but guaranteed hourly from our iPhone friend on here? The big thing on commission, again, it floats up and down. So with commissions, they do have to have a 2 year history of doing it. Okay. I'm in the same boat. I'm commissioned as well. So I do have to have a 2 year history of my own income to be able to get my own mortgage. So anything that is on commissioned, even if there's a guaranteed hourly on there, it is a commission structure. So the big thing is, I do want to clarify that by saying lots of people have some sort of a commission structure on top of a salary. And if that's what you mean, what we would typically do there, if you have a guaranteed hourly wage or a guaranteed salary, base salary, we can always use that. If there's commission on top of that, then we would need the 2 year history to use the commission portion, because the commission portion is the one that floats up and down. Anything that has the guaranteed structure for it, we can use that right away. So if you have, for example, guaranteed salary or guaranteed a certain amount of hours, maybe that's a 40 hours or 35 hours guaranteed per week at a certain wage, we can use that right away. It's just the commission part. To be able to use the commission portion, we do need a 2 year history to include that as well. Hopefully that clarified.
I got this. I had
All
this one
right, what have we
from
got here? I'm currently working with a realtor, but when I need a house inspection to be done, can I still reach out to you on that, from Jan?
Dan.
Um,
So
Typically what's going to happen there, I'll let Andy kind of jump in there and take that one.
yeah, so that's hard. When it comes to real estate and stuff like that, I like to work with as many different realtors as I can. But when it comes to somebody already working with one, I don't typically like to step on toes. I like to keep that boundary where it's at. So if you're already working with one and have, a contract and stuff in place with them, I kind of have to back off and say I can't offer any advice or anything like that. That's would be overstepping. But if what you're asking is if you need a referral for a home inspector, I can let you know who I use, but I would typically just keep it between you and who you're using. But that's kind of where I am with that one. It's just it gets a little harder and hazy, and I don't like stepping on toes that way. But if I'll always put it out there. If anybody wants different representation at some point because they are not happy or satisfied with it, I'm happy to have that conversation. But I'll leave it at that before I get myself in before I say something that might get me in trouble. So, do I have connections to acreages is another question. Yes, absolutely I do. I grew up on an acreage. I know lots about acreages. Whether you're looking for one with a well, you have to haul your water in, it's connected to the city, whatever. Yes, we have connections with acreages too. So, 100%. Um, yeah, I think 3 years plus guaranteed hours. Nice.
I
Yeah.
just wanted to kind of just a quick comment on Jan's question there as well. I mean, the thing about if you're already working with a realtor professional, typically they're also going to have people that they want to, have on their team for their home inspection as well. So, as Andy mentioned, we all kind of want to make sure that we're working within the comforts of the people that we trust, right? So we've got home inspectors and lawyers that we've worked with for many years that we trust fully. We know the quality of their work. We know how they're going to really work to help our friends and our clients and ourselves to get the best information out there that we can. So, if you're working with a realtor, that's great. They're likely going to have their own, and I mean, if they don't, you might want to chat with Andy and see if he might be a better partner there for you as well. So, yeah, lots of great information. Thank you so much, Jen.
And yeah, with that too, we are connected with, a lawyer and we're connected with the home inspectors, but there's just so much more. We're connected with other people in different areas of financing. We're connected with different people in insurance and trades, and the list just literally goes on and on and on and on. So whenever you buy a house, even before you buy it or well after, if you want to call me 2 years down the road and say, hey, there's an issue with our house, who do I call? 9.9 times out of 10, I will have a number or a few of them that you can call to get good service with. And mostly the people that I have either A, have worked with my own stuff or have worked with other clients. So like our job is never done once you have keys in the house. It's forever. It's you need something a month, a year, years down the road, we'll be there for you. That's the cool thing about it. Yeah, Becky, yes, you jumped in just now. You missed a bunch. That's fine. There is a recording of this when we're all done and wrapped up here. It will be uploaded to YouTube, but I will be emailing everybody a copy of this recording by tomorrow, so you guys will have that. It'll be through an email, so if you're not seeing it by tomorrow, check your spam folders too. Sometimes it winds up in there, but you will get a recording. And if for some reason you don't see it tomorrow, and there's no, it's not in your spam folder, reach out to me directly. I'll just get you the link right away. So easy, easy. But yeah, I think unless anybody has any other questions, I know we talked about a lot. I do apologize if we filled your head with a bunch of stuff. I get it, but it is just important stuff to know before getting into this whole thing and during the process. So um, I guess like Ryan put it in there, I appreciate everybody who's already booked a call with us. I'm looking forward to calling everybody here soon. We're gonna have some really good conversations, but if nobody else has any questions, I mean, that's a good part to leave it for now. Yeah. What do you think, Ryan? You good?
I think that's awesome. You guys have yourself a wonderful, wonderful evening. Thank you so much for joining us, and we can't wait to chat with you one on one. Looking forward to connecting.
Beauty. Thanks, everybody. Enjoy your night, enjoy your weekend, and we'll look forward to talking soon. All right, take care.
Take care, guys.